Yeah. Yeah. So for my next question was, a lot of people with side gigs ask us this. What's your rule of thumb for when someone needs to turn their side hustle into a business entity?
Yeah, I mean, it depends on the scope, really. It's like how much activity are you spending on this, and um, how much time and effort and money are you putting into this thing? And so, I mean, if it's something you do like once a month and you make $5,000, then okay, you probably leave that as a disregarded entity. But if you are putting serious effort and time and money into this thing, then that's typically going to be, we want to organize it into a separate entity. Yeah, it's not a hard and fast rule. The I I've talked to many clients over the years, and a lot of times, we talk about S corporations, and I'll see on X, there's all these tax people on there that I come across, and they're like, oh, people are overusing S corps and whatever, and every accountant, every tax preparer in the world has a different opinion about this. And I've heard people say, oh, you need to be making $200,000 before it's worth it to do an S
Yeah.
corporation. It's like, what are you talking about? I've
Right.
heard I've heard people say 100,000, 50,000, 20,000, zero. There's no rhyme or reason. Um, the If we're talking about S corp specifically, then there are there are potential things you got to deal with. So if you're profitable, then you have to think about salary. If you're not profitable, then you don't. If you Either way, if you're organizing into a separate entity for tax purposes, then you're either going to be a C corp or partnership or S corp. Um, each one of those is going to have its own filing, which is typically a good thing from an op perspective, just to split it off into somewhere else. Um, so it depends on the level of activity. It depends on what the goal is with this whole thing. Some people are very high earning W-2 people, and for them, it's worth just splitting it out from day one simply because of audit risk, right? Even though the numbers are the same, it's just that the fact that you have higher income, you have higher audit risk already. So you don't want to double down on that by creating like Schedule C or a Schedule F that has its own elevated audit risk. So by putting it off into a 1065 or 1120S or some other filing, then that helps uh, helps reduce the audits. So uh, so yeah, it depends.
Definitely a it depends question.
Yeah.